It's time for another episode of Sunday Stock Battle. I know I'm technically posting this on a Monday. I ended up having a really busy weekend and I just didn't have enough time to get it out on Sunday. But we're still going to have a lot of fun today because we're pitting Visa up against MasterCard, and that's going to be a lot of fun. Let's get started. What's up, everybody? My name is Ala and welcome to my world of stocks. If you want to see past episodes, make sure you check out the Sunday Stock Battle playlist, which you can find up here down in the description or at the end of this video on a clickable card. Also, don't forget to leave a comment for Ala's World Consensus. Let me know which one of these two stocks you like the most. If you had to invest in one or if you had to choose one, which one would you choose? Either Visa or MasterCard? Let me know in the comment section. I'll tally up the results and I'll have that for you guys in the next episode. In last week's episode, we looked at Alibaba versus JD.com, and the results were a little surprising to me. Out of 29 votes, Alibaba took the win with 62% of the votes, but I actually thought that they would win by a little bit more. In any case, a lot of you actually voted for both companies because you couldn't choose one over the other, and I thought that was pretty cool that both stocks got a lot of love and it was a fairly even matchup. But back to today's matchup of Visa versus MasterCard, just want to get a couple quick disclaimers out of the way. I do not currently own any position in either stock. And also just keep in mind that we do this series just for fun. It's not really meant to be taken too seriously because I can't cover every single detail or make, all the fairest comparisons. So always do your own research and make your own decisions. But the way that we'll be doing this is we're going to run through a few different categories, and all throughout I will be awarding 1 point to either stock, and then at the end I will tally up the results and declare a winner based on everything that we've talked about. But with all that being said, let's go ahead and get started, and let's start by looking at their business and their market share. Okay, looking at their business, both are very similar in that they are both payment services companies, which includes the development and implementation of credit, debit, prepaid, commercial, and payment programs and solutions. And although many people confuse Visa and MasterCard as financial institutions that carry the same risks as something like banks, like changes in interest rates or customers not paying back their debt, in reality, Visa and MasterCard are just a sort of middleman. If you want to access your funds from your bank account or your credit card, chances are pretty high that you're using either a card or a service from companies like MasterCard or Visa to access those funds that are supplied by a bank or financial institution. So the bank is really the one that's taking all the risk, while Visa and MasterCard are just collecting a fee whenever customers use their payment services. So they both have great business models that has led to high profit margins and decent dividend payments, but we'll talk more about that later in the video. First, I want to talk more about the industry and the market share that each company controls. Well, the first thing that comes to mind is the decline that we're seeing in cash being used as a result of many different things, but certainly also because of online shopping, where these companies play a big role. See, every time someone buys something online, they usually use a card or payment service that is many times from Visa or MasterCard. And here's a chart from Total System Services from 2017 that is based on a survey that they do every year, and it shows credit and debit payments are commanding much more in sales over cash across a variety of store types, with the only exceptions being coffee shops, restaurants, and maybe discount stores. But that's probably because of convenience and tipping at restaurants, and maybe because of people with lower income who don't have access to credit generally spending more time shopping at discount stores with cash. Still, when looking at all the people surveyed, 44% preferred to use debit cards, 33% preferred credit cards, and only 12% preferred cash. And when we look at the rise of online shopping, we know that only around 12% of global retail sales last year were even done online, which represents a market that still has a lot of room to grow. Even a very well-developed country like the US saw just 10% of their sales done online, and when looking at an enormous market like China, which by the way, their e-commerce market is projected to grow from around 1 trillion this year to around 1.8 trillion in 2022, only less than 40% of the Chinese population ever shop online at all. However, China is a whole nother issue on its own. Now, to my understanding, foreigners visiting China can use their foreign credit or debit cards wherever they are accepted, which by the way greatly varies by location, but actual Chinese living in China don't really have a way of signing up for any Visa or MasterCard services, despite 6.7 billion credit and debit cards being in circulation in 2017, according to global data, which now predicts that China will beat out the US as the largest bank card market in the world by sometime this year. And the problem for Visa and MasterCard is that over 90% of the market is controlled by China's own bank card network called UnionPay. And while China has made many promises to open up their market to foreign-based card networks, they have never made good on their deals, and even to this day, the process of getting approved in China usually gets these companies nowhere, as China refuses to fully process the applications of companies like Visa and MasterCard, among others. Still, both are very hopeful that they will one day be able to tap into this enormous market, with both stating that they are working hard with the Chinese government to get approval and are preparing for all opportunities in the meantime. So because the e-commerce market will continue to see tremendous growth in the future, and because Visa and MasterCard still benefit from traditional retail, and because cash is being used less and less, I really see both companies having about the same future potential because they're both so similar. But when we look at current market share for the past 2 fiscal years, we start to see a different picture. When looking at total transactions, which is just the total number of transactions made on the company's network, basically using one of their products or services, we can see that Visa accumulated more transactions on their network in both years, with over 124 billion last year alone. And when looking at total volume, which is just the total monetary value of all of those transactions, we can see that Visa did almost double the volume of MasterCard in both years, with over $11 trillion in volume last year alone. And finally, when looking at total cards out there in circulation, we can see that Visa beat MasterCard once again in both years, with over 3.3 billion cards in circulation as of the end of last year. So given that Visa saw significantly more transactions, more volume, and more cards in circulation in both of the last 2 fiscal years, we'll go ahead and give 1 point to Visa here for controlling a greater share of the market. However, it's important to consider that because MasterCard is the underdog or smaller player in the market, they technically have more market share to steal, whereas Visa has more market share to lose. So let's now check to see if MasterCard has been able to capitalize on the opportunity last year by growing their business at a higher rate, or if Visa was able to remain dominant in growth as well. Well, when looking at their year-over-year growth of total transactions, MasterCard was able to grow at a higher rate, growing by over 18% year-over-year, while Visa only grew by 11.2%. When looking at total volume growth, MasterCard once again beat Visa with 13.5% growth versus 8.7%. And when looking at total cards growth, MasterCard took the sweep with over 11% growth versus Visa at only 3.1%. So because MasterCard is growing at a higher percentage in these areas, we'll give 1 point to MasterCard as well. Okay, so that's looking at their performance in the market, but how is it translating to revenue and profitability? Well, starting with revenue, we can see that Visa brought in significantly more revenue than MasterCard in all 4 of their most recent fiscal years, with 2018 bringing in over $20 billion in sales, whereas MasterCard only did around $15 billion. However, revenue growth can sometimes be just as important as the raw total, especially when the 2 companies are competing so closely, and here we see that MasterCard actually grew their sales at a higher percentage year over year in 2 of the past 3 fiscal years, and ended with a higher 3-year average growth rate of 15.7%, whereas Visa only has around 14.1%. So despite Visa having higher sales, I'm going to award 1 point to each because MasterCard was able to grow their sales at a higher rate. But how do these sales translate over to profitability? Well, when looking at net income, Visa was significantly higher in all 4 years, with almost double the net income of MasterCard in fiscal 2018, with around $10.3 billion versus $5.9 billion. On top of that, Visa also grew their earnings at a higher percentage than MasterCard in 2 of the last 3 years, with a 3-year average growth rate of over 20%, while MasterCard only did around 18%. And Visa also has a higher operating margin of 65% versus MasterCard at 56%. So we'll give the point here to Visa for bringing in more earnings and still growing them faster as well. But what about earnings surprise? Which company is beating expectations by a greater amount? Well, in the past 4 quarters, both companies were pretty evenly matched, winning 2 quarters each, And because both saw positive surprise in each quarter, we'll go ahead and award both stocks with 1 point here as well. Now moving on to their balance sheet, we can see that Visa has significantly more cash, more current assets, and despite having almost 3 times the total assets, they only have less than 2 times the total liabilities, which leaves them with better current and total ratios as well. So the point here obviously has to go to Visa. Okay, now let's take a look at their dividends, and here we can see that Visa has a slightly better yield of 0.7% versus MasterCard at 0.6%. Both have very good payout ratios, but MasterCard is slightly better at 17.5%. MasterCard also has a much better 5-year growth rate of over 36% versus Visa at 20%, but Visa also has a better growth history of 10 consecutive years versus MasterCard at only 7 years. So while both dividends are very similar, I think I'm going to barely give the point here to MasterCard just because their payout ratio is lower and their 5-year growth rate is so much higher. Although I admit that this point is pretty biased because I tend to favor dividend growth stocks with lower payout ratios and higher growth rates, but either way, I'm giving the point here to MasterCard. Okay, now let's wrap up the video by looking at their stock performances and their valuations. Now, MasterCard currently trades for around $216 per share with a market cap of $222 billion, while Visa trades for around $140 per share with a market cap of $3.8 billion. And in the past 5 years, both saw really good performance, with MasterCard climbing 183% and Visa climbing 153%, and more recently in the past 1 year, MasterCard climbed 34% while Visa climbed 23%. So despite both stocks having very similar performance, we'll give 1 point here to MasterCard for having a little bit better stock performance in recent history, which means that both stocks are now tied for points at 5 each, so the deciding factor will be their valuations. And here we can see that Visa has a lower trailing PE of 30 versus 38, a lower forward PE of 22 versus 24, a higher PEG of 1.6 versus 1.4, but a better PS of 14.5 versus 14.9, and a dramatically better PB of 10 versus 41. So the point here has to go to Visa, giving them the overall victory in what has been the closest matchup that we've ever had on the series, with a total of 6 points to MasterCard's 5. So what do you guys think about this matchup? Let me know down in the comment section. Let me know if you're already invested in one of these, and if not, if you had to choose one, which would it be? I'd love to hear your thoughts. For me personally, I don't think I'm ready to jump into either stock, but if I had to choose one, I think I might actually consider the loser in MasterCard, just because they're growing their sales at a higher rate, also their dividends at a higher rate, and they have more market share to steal. A lot of times I tend to go for the underdog company because, they might have more market share to steal, whereas the one on top has more to lose. So for that reason, I might consider MasterCard. But if I wanted the safer pick, I think I'd definitely go for Visa because they have a more attractive valuation. And despite being so dominant already, they're still growing their earnings at a pretty high rate, at a higher rate than MasterCard, which is pretty impressive. That shows, how well management is doing at running the company efficiently, and having some great margins there too. So anyway, so for those reasons, I think it's a very, very evenly matched comparison. But anyway, I'd love to hear your thoughts. If you did enjoy the video, please consider supporting it by hitting the like button, and I will catch you guys in the next video. Take care. Bye-bye.